Welcome back to Investing Talk Podcast. Today we're taking an in-depth look at a company that's been making some, significant waves in the renewable energy sector. Sunrun. Our goal today is really to help you answer that key question. Is now a good time to consider buying Sunrun stock? We've sifted through the latest reports, analyst notes, financial data, all that stuff to bring you the most important insights and, help connect the dots. Before we really dig in, if you find this analysis valuable, please do consider subscribing, maybe liking this, leaving a comment. Your engagement honestly helps us bring you more of these analyses. And hey, if there's a specific company you'd like us to explore, just let us know in the comments below. You could also consider buying us a coffee if you appreciate the work we do. Okay, so let's unpack Sunrun. Starting with its fundamental health, what are the numbers telling us right now about its performance? What's the overall financial picture look like?
Yeah, it's a really interesting one. It's almost like a tale of two different stories playing out in their financials. So on one hand, their Q2 2025 results, they were remarkably strong. Revenue hit about $569 million, which actually beat what analysts were expecting. But the thing that really jumped out was their earnings per share, the EPS. It shot up to $1.07 in that quarter. I mean, that's a huge leap from just $0.55 a year ago. So that definitely signals some strong operational improvements, at least in the short term.
Okay, $1.07 from 55 cents. That definitely sounds like strong momentum, especially that EPS jump. But you said a tale of two stories. So when we look bigger picture, beyond just that one quarter, what does the longer-term trend show?
Exactly. That's where it gets a bit more nuanced. If you look at the trailing 12 months, that's the performance over the last full year. Picture changes. Over that period, Sunrun reported $2.13 billion in revenue. Solid top line. But, and this is the kicker, they also posted a substantial net loss of negative $2.57 billion.
Wow, over $2.5 billion in losses.
Right. And looking back even further to 2024, their revenues actually declined almost 10% from 2023. And those net losses, they got bigger, increased by over 77% year over year. So it points to, definite volatility and some real underlying uncertainty about their path to consistent profit over the longer haul. It's not quite there yet.
Okay, so strong recent operational wins, like you mentioned the EPS, maybe good margins, but also these really significant ongoing losses over the longer term. What does this sort of duality tell us about their actual financial health? And maybe more importantly, how does it position them against competitors in this very fast-moving solar market?
It tells us their financial health is, it's quite mixed, almost paradoxical, really. Operationally, Q2 2025 looked great. Their gross margin hit 59.9%.
Almost 60%. That's impressive.
It is. It shows they're making good money on each installation before overheads. Strong cost control there. They also generated strong cash flow in the quarter, which is vital, right, for any growth company. And they hit a record storage attachment rate, 70%.
70%. So 7 out of 10 new solar setups also got a battery.
Exactly. And that's not just a nice-to-have number. It's really strategic. It positions them right at the forefront of this whole distributed energy trend. People want backup power. They want independence.
Yeah, that high storage rate sounds like it could be a really strong competitive advantage.
Yeah.
What makes it so key, and how does Sunrun sort of stack up against its rivals because of it?
Oh, absolutely it is. It meets that growing consumer demand, like I said, for energy independence, resilience. But it also, creates a stickier customer, potentially opens up recurring revenue from managing those batteries, grid services, that sort of thing. However, there's always a however, isn't there?
Usually is with these stories.
Yeah. The flip side of that mixed health is those big net losses we talked about. And sources point to significant debt loads too, even if the exact details aren't always clear. So operations are improving, sure, but the balance sheet, the capital structure, still faces some real challenges. Despite all that, though, their competitive position is, frankly, pretty compelling. Sunrun is still the undisputed U.S. leader in residential solar and battery storage. That leadership was even backed up by record summer capacity numbers in 2025.
So they're number one, despite the financial wobbles.
Pretty much. They're key differentiators. That direct-to-consumer model gives them control over the whole process, the customer experience. And of course, those super high storage attachment rates we mentioned. Now, they face serious competition, no doubt. You've got Tesla Energy, Solar Edge, lots of strong regional players too. But Sunrun's recent growth, especially in storage and adding new subscribers, really solidifies their position. They're not just a player. They are arguably the dominant force really shaping how residential energy evolves. It's like the whole company is a microcosm of the sector. Huge potential, but that path to consistent profit
Right.
still under construction.
And that leads us to the really tricky part, doesn't it? How do we even begin to value a company with these kinds of mixed signals? Strong operational momentum 1 minute, big losses the next. What does the market actually think Sunrun is worth right now?
Yeah, this is exactly where those traditional valuation metrics can get, let's say, challenging. It's like trying to measure with a bent ruler sometimes. Because of those big negative earnings over the last year, remember, the trailing EPS was minus $11.40, the standard price-to-earnings ratio, the PE ratio. It's not meaningful, it's negative.
Right, can't divide by a negative.
Exactly. But if you look at the forward PE ratio that's based on what analysts expect them to earn in the future, it stands at 14.68.
Okay, 14.68 forward PE. So the market is basically betting on them turning profitable down the road. That sounds hopeful.
It does. It shows an expectation of a turnaround. Absolutely. As for their overall size, their market cap total value of all shares is currently around $3.21 billion. And worth noting, they don't pay a dividend right now.
Okay. And what are the analysts saying? What are the price targets looking like?
Well, the consensus target, the average is somewhere between $14.13 and $14.61, which, is only modestly above where the stock has been trading recently, maybe 5% higher, roughly.
It's not a huge upside predicted by the average analyst.
Not on average, no. Now you do have some more bullish analysts out there. Firms like JP Morgan, Oppenheimer, they reacted to that strong Q2 by bumping their targets up, some aiming as high as $20 or $21.
Ah, okay. So some see more potential.
Definitely. But overall, looking at the forward multiples and the average targets, the general view seems to be that the stock isn't, deeply undervalued based on what we can see coming financially. It's not exactly a screaming bargain if you're just banking on a quick valuation re-rating.
Got it. So with those fundamentals and valuation points in mind, let's look at the chart. What's the recent price action telling us? Any technical signals for, say, short-term traders or maybe longer-term investors trying to figure out an entry point?
Well, this is where you really see that immediate, almost visceral market reaction to the Q2 results we talked about. Sunrun shares surged 32% to $13.92 on August 15th, right after those earnings dropped.
32% in a day. Wow.
Yeah, big move. And if you look at its 52-week range, it's been a real roller coaster from a low of about $5.38 all the way up to $22.26. That huge range just screams volatility, right?
Absolutely. So where are the key price levels people should be watching now? Support, resistance, that kind of thing.
Okay, so critical support levels, places where buyers have stepped in before, seem to be around that $10 to $10.46 zone. On the upside, resistance where selling pressure might emerge looks like it's currently around $14 to $15. And then there's probably stronger resistance further up near that $22 level, the top of the recent range.
And momentum. Moving averages.
Good question. The current price is trading above both its 50-day simple moving average, the SMA, that's at $9.64, and its 200-day SMA, which is at $9.16. Trading above those is generally seen as a bullish sign, indicating upward short-term momentum.
Okay, so technically it looks like it's trending up in the short term.
It does, but, and this is a really critical warning, especially for shorter-term folks, the 14-day relative strength index, the RSI, it's currently way up at 80.36.
80. Isn't anything over 70 usually considered overbought?
Exactly. An RSI above 70 typically signals overbought conditions. Over 80 is, well, extremely overbought. It suggests the stock has run up very fast, too fast perhaps, and a pullback or at least some consolidation is highly likely in the very near term. Plus, remember its beta is 2.37, super high. Means it moves, on average, 2.37 times as much as the overall market. Huge volatility baked in.
Okay, so high volatility, technically overbought, sounds risky short term despite the recent pop.
That sums it up pretty well. The immediate technical sentiment is bullish because of the trend, but there's a very strong near-term risk of a correction or just sideways chop after that big surge.
Makes sense. Okay, moving beyond the numbers and the charts for a second. What's the general feeling, the sentiment around Sunrun right now, and what specific news has really driven its path lately?
Well, as we've mentioned, those Q2 2025 results were undeniably the big driver recently. A strong positive surprise. Beating expectations on both revenue and that key EPS figure, that's what lit the fuse for the rally. And like we touched on, you saw big firms like JP Morgan and Oppenheimer quickly react, raising their price targets, some quite significantly up to that 2021 range. The broader analyst consensus, even with those bumps, still generally leans towards a buy rating. But again, it's important to remember that the average projected upside from where it's trading now is still pretty modest according to those targets.
Right. And how does that analyst view compare with, say, what people are saying on social media versus the overall market mood?
Interesting contrast there. On social media platforms, you definitely see more bullishness, lots of excitement, optimism around those recent operational wins, the storage growth.
Understandable after that earnings report.
Totally. But then you zoom out to the broader market picture, the Fear and Greed Index, which kind of gauges overall market sentiment. It's currently sitting at 39.
39. That's in the fear zone, isn't it?
It is. So it reflects a much more cautious, maybe even risk-averse tone in the overall market right now. And that exists despite Sunrun's own recent strong performance. It's just a reminder that even great company news happens within a larger, sometimes more skeptical economic environment.
That's a great point.
Ah.
Okay, looking ahead then, what potential events or trends could really move the needle for Sunrun stock? What are the catalysts, positive or negative, that we should be keeping an eye on?
Sure. In the very short term, the next earnings report is always a big one. That's expected later in August 2025. That'll be a critical checkpoint. Strong or weak results there could definitely spark more volatility, maybe more target revisions. Also, just continuing to deliver on that record deployment of storage and growing their subscriber base, maintaining that momentum, could keep the positive vibes going near term.
Okay, makes sense for the short term. And thinking longer out, what are the bigger picture trends or potential events that could shape Sunrun's future?
Long term, the biggest factor is probably policy and regulation. Shifts favoring renewables, think tax credits, net metering rules, infrastructure spending. Those are huge potential tailwinds for the whole sector, and especially for a leader like Sunrun.
So government support remains key.
Absolutely critical. Beyond that, you could see strategic partnerships form, maybe consolidation through mergers and acquisitions in the sector, or even significant breakthroughs in energy storage tech. Cheaper, longer-lasting batteries could be a game changer for their costs and offerings. Fundamentally, their leadership position in distributed clean energy puts them right in the sweet spot to benefit from these massive long-term energy transition themes that are only going to accelerate.
It definitely feels like a sector with long-term tailwinds.
Yeah.
But every investment has risks. What are the specific red flags, the sector-wide challenges investors really need to be aware of with Sunrun?
Absolutely. Got to look at the risks. Stock-specific ones. Well, those high ongoing net losses are numero uno. Q2 was good, yes, but that longer trend of fluctuating revenue and persistent losses needs very careful watching. Why are they still losing money despite the growth? Is it customer acquisition costs? Financing models? That needs understanding.
Right, the why behind the losses.
Exactly. Then there's the reliance on those government incentives and subsidies we just talked about. That's a major policy risk. Rules can change, tax credits can expire or get modified, net metering policies shift. Any of that can directly hit their business model and demand. And of course, just basic business risks, volatility in input costs for panels, racking, batteries, or even shifts in consumer demand for solar itself.
Okay, so those are company-specific risks. What about the broader sector dangers that Sunrun just can't avoid being in the solar space?
Right. The whole solar and renewable sector is super sensitive to macroeconomic factors. Interest rates are a big one. Rising rates make it more expensive for Sunrun to finance installations because a lot of this is done through leases or loans. It also makes it potentially less attractive for consumers if their own borrowing costs go up.
Yeah, financing is key for solar adoption.
Crucial. Then, like you said, unfavorable policy changes at the federal or state level can slam the brakes on demand pretty quickly. And finally, commodity prices. Things like polysilicon for the panels, steel, copper, if those spike, it hits their input costs directly. These are broad risks impacting the whole industry, and Sunrun, even as the leader, is definitely exposed.
Okay, so putting this all together now, the good, the bad, the uncertain, what does this whole analysis really mean for someone thinking about investing in Sunrun today? What's the bottom line investment thesis?
All right, if I had to put a number on it, my overall rating for Sunrun right now would probably be around a 6.5 out of 10.
6.5. Okay. What's the thinking behind that specific number?
Well, it's layered, reflecting everything we've discussed. On the plus side, Sunrun has shown genuinely strong operational performance recently. You see it in the growing storage attachment rates, that expanding gross margin, the positive EPS surprise in Q2. That execution is real, and it's fueled that bullish analyst sentiment and the target upgrades. They're doing things right on the ground.
I sense a significant but coming, especially thinking about those long-term losses you mentioned.
There absolutely is a significant but. You can't just ignore those large, persistent long-term net losses and the underlying volatility in the business. Plus, the reliance on incentives adds risk, and those broader sector headwinds we discussed, interest rates, policies, they definitely temper the long-term risk-reward calculation. And then there's the technical picture right now. That RSI over 80 is flashing a bright yellow, maybe even red warning light for the short term. It's severely overbought, suggesting a pullback is more likely than not soon. So while the immediate news flow is positive and the sector has momentum, the valuation isn't exactly cheap right now, and the average analyst targets don't point to massive upside from here. Sunrun really kind of embodies that paradox. You can be the leader in a hot growth sector, but that doesn't automatically mean smooth sailing or consistent profits, at least not yet.
So wrapping it up, what's the takeaway for different kinds of investors looking at Sunrun right now? Short-term trader versus long-term holder.
Okay. For short-term traders, yeah, there might be tactical plays around momentum or news catalysts, but that high volatility and the current overbought condition mean you need to be extremely cautious. It's definitely not a set it and forget it kind of trade. High risk. For long-term investors, given those persistent losses and the sector risks, even with the operational improvements and leadership position, Sunrun probably still fits best in the speculative part of a portfolio right now. At this moment, it seems potentially more suited for short to medium-term trading strategies rather than being a core long-term holding for someone seeking stability. You're really betting on those future policy tailwinds and market maturation more than current consistent earnings power.
Sunrun definitely presents a fascinating picture, doesn't it? A company firing on some operational cylinders, really leading in storage in a massive growth industry, yet still wrestling with those significant long-term profitability questions. So the question for you to consider is that recent momentum, that Q2 strength, enough to make you look past the history of losses? Or does that flashing overbought signal in the chart suggest maybe patience is the smarter move right now? It really is quite the balancing act. Definitely something to mull over as you navigate the always changing world of renewable energy investments and watch how these companies try to make that leap from pure growth to sustainable profits.